Hello, welcome to Accounting Hub. I'm Professor George Scarping, PhD in Accounting, and our topic today is buying plant asset or fixed asset and paying property tax. So what do we have here? What is plant assets? Accounting data can be used to predict the efficiency of an investment. The rate of the money earned on an investment relative to the amount of the investment is called return on investment, or ROI. The more efficient the investment, the higher its ROI. And these predictions will help company managers decide which asset to buy. So, first of all, let's go to our Excel file. And guys, remember, all our Excel files are free, and the link to download it is in our video description. So how to record a purchase of assets? So here, January 3rd, we pay cash for a property, $85,000. Check number 612. So date, January 3rd. January 3rd here. Account title, so property, we can call it property, or plant assets. It is a debit. Why? Because a property is an asset, plant assets. And when we increase our asset, we debit this asset. Check number 612 and debit $85,000 and credit cash. If we are crediting cash, we must go to the cash payments. So date, January 3rd. Item, property. Check number 612. Debit for property, 85. And credit cash credit, 85. And now we are good here on some of debits and credits. However, this second transaction here, we are purchasing two equipments, paying only one number. How do we split this $27,000 into the copy machine and a display case? So let's go back to our PowerPoint. Whoa, where are you? Here. How to record the buying of a group of assets. Calculate the total estimated value of all the assets bought. Asset 1 plus asset 2, total. So here, what is the, if we were purchasing only the asset 1, here in our scenario, the copy machine, it would cost us $7,500. If we would purchase only the asset 2, our scenario here, the display case, $22.5. So the total, if we purchase them separately, would be $30. So how do we allocate the cost to the copy machine? The first asset, $7,500, divided by total. So it is 25%. So the copy machine is 25% of our lump sum purchase. So the total purchase, $27,000. Percentage for the copy machine, 25%. So $6,750. So let's come here, March 5th. Copy machine, let's call it office equipment. Check, 734. A debit, 25% of this number. So this number times 25%, 6,750. The display case, 22.5 if we purchase only this display case, asset 2. Divided by 30, 75%. So the display case, let's call it store equipment, it would be 75% or 20,000 and a quarter. So here, store equipment, and this 75% remaining. $2,250. Going back to the Excel, and our credit, cash. Because we are purchased with check, so it is cash. So cash, 27. And here, whoa, 112, 112, we are good to go. So, cash payments, March 5th, office, equipment, check number 735, 6,750, store equipment, 20, and our total here, cash credit, 27. Whoa, 112. And for this property, we need to pay tax. We need to pay property tax. So land and anything attached to the land is called real property. Real property is sometimes referred to as real estate. All property not classified as real property is called personal property. The value of an asset determined by tax authorities. So we pay tax not based on the purchase price or the market price. Is the price determined by tax authorities. For the purpose of calculating tax is called the assessed value. Assessed value is usually based on the judgment of officials referred to as assessors. So how do we record it? That is easy. Property tax, asset value, $80,000, tax rate 1.3, so 80,000 times 1.3, 1,040. So April 15th, property tax. And here, guys, this property tax, we can consider it as an expense or a prepaid expense. Prepaid expense is more correct because this property tax is for 1 year. So property tax should be a prepaid expense, an asset. However, some companies consider it as an expense. So that depends on how your textbook is giving it, what your instructor is telling you about that, and you should follow them. But the most accurate is prepaid expense. And here, property tax. Oh, we don't have the number of check here. So let's consider check 780 and then 1,040, or we can consider it. We have no tax, so we haven't paid that yet. Property tax payable. 1,040. So no cash payments journal. Okay, guys, so property tax, little bit confusing. So ask your instructor if you have questions about it. Guys, watch this video how many times you want, and thank you for watching this video. Questions or comments, leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.